In my quest to reach financial freedom, one thing that I am focusing on is increasing my passive income, earning money without doing anything. Because one thing in life is certain, you only have 24 hours a day, and in that, you can only work a certain amount of time. You can't pass that limit. Even maximizing the 24 hours a day is impossible since your body would need to rest. That's why this is where passive income goes in. Just imagine it this way. Since you can only work for a certain amount every day, you have to hire workers to work for you to increase your productivity. With increased productivity, this can lead you to make more money. And in passive income, your workers are your money. You are hiring your money to work for you. And the best thing about it is it doesn't complain, and money can break that limit. It can work 24/7. But there's a catch. You need to know where you will put it. Now, there are a lot of ways for us to make our money work for us, but that's the difficulty of it. What is the right vehicle to use? What suits me the most? So in this video, I will show you a method I use in increasing my passive income. This is by dividend investing. And in our country, there are two popular vehicles where you can apply this strategy. This is through the PAG-IBIG MP2 fund and the stock market. So let's first discuss what is PAG-IBIG MP2. This is a special voluntary savings with a 5-year maturity. This is designed for active PAG-IBIG fund members who wish to boost their savings and earn higher dividends. To cut things short, if you are a member of PAG-IBIG in the Philippines, you can easily open up your MP2 fund online. It's that easy. You just have to apply through their website, fund the account, and wait for a few days and it will appear in your PAG-IBIG account. Now, as the term 5-year maturity, this means you need to wait for 5 years to get the benefits except only under specific circumstances. Example of one is total disability or insanity. Now, I'll leave a link below where you can find this in detail. So if you do have a reason that is listed on this list they provided, you will only receive 50% of the total dividends accumulated. And if you withdrew without any reason at all, you won't be receiving any dividends whatsoever, just your whole savings. But the best thing about this fund is your money is guaranteed. This means after 5 years or after maturity, you get your money for sure, plus all the dividends accumulated. And that's not all. It's tax-free. So how's the performance of this fund? For the past 11 years, if we average its dividend rate, they average at 6.01%, which is high, okay? You won't easily get 6% from banks. And the highest dividend rate they paid was in 2017, which is 8.11%. Now, I just want to discuss something. You will only get this rate if you put your money early in the year. To be exact, every January. Do stay with me here, although there's a bit of math. I will try to explain it as simple as possible because this is important later on when we compare it to dividend stock investing. Now, I got my computation for our discussion today in OFW Power's video wherein he used dividend factors for each month. I'll leave a link below for his video. For me, this is the best video for PAG-IBIG MP2 computation since I also have a PAG-IBIG MP2 account, and with this formula, I got the exact amount when I tried it. Anyway, there's a link below. Do subscribe to his channel. To continue, this means let's say PAG-IBIG MP2's dividend that year is 6%. If you put your money in January, then you will get the whole 6% since your dividend factor for that month is 1. Since 0.06, the interest, multiplied by 1, the dividend factor for that month, is equal to 0.06, which is 6%. But if you put your money in July, since the dividend factor for that month is 0.50, meaning 0.06 multiplied by 0.5 is only 0.03 or 3%. To put an example, a 10,000 pesos investment in January would earn you 600 pesos of dividends. But if you put it in July, you will only get 300 pesos. Do you get it? So if you're like me who doesn't have a large amount of money at the start of the year and relies solely on my monthly income for my investments, then my year-end dividends would be much lower. Now, I side-by-side a table wherein we invested 1,000 pesos a month. In year 1, the one who put 12,000 in January earned 720 pesos compared to the one who invested 1,000 pesos a month, which only earned 390 pesos. This is even though in the year end, they both had 12,000 pesos. The same is the next year. Since you add the previous year in January, the one who lump summed their 12,000 pesos in the first month earned more dividends. Fast forward 5 years, the total invested money for both is 60,000. The one who lump sum every January grew his 60k to 71,700 pesos, which is a 19.50% growth, compared to investing monthly which only had 69,843 pesos. So not much of a difference. It's still not a bad growth. That is a 16.41% return on investment. Now with that explained, let's go to stock dividend investing, which is the main dividend investment vehicle I use. Now I won't be diving deep into stock market investing to make it short. Now the main strategy here is investing in dividend paying companies that are strong that you are sure will last for a long time. And of course, just like PAG-IBIG MP2, wherein you need to have an account, for stocks, you need a brokerage account, which can be from your bank, such as BPI, Metro Bank, or BDO, or if you don't like a broker from your bank, you use brokers like PhilStocks, which is the one I use, or COL Financials, and it's easy to open one. When I created my account, there wasn't even a line. It took me less than 30 minutes. Anyway, usually some companies give out 1% and as high as 16% a year, but the only downside to stocks is its volatility. Unlike the PAG-IBIG MP2 which guarantees your money in the end, here you can even lose everything. That's only if you invested in a lousy company. But on the brighter side, you not only earn through dividends, but also capital gains. This is when the stock price of the company you bought increase in value. Just to give you a clue, our stock market index has grown by 7.63% compounding return since 1987. This is with the market still down this 2022. So if you invested 1,000 a month since 1987, it would have grown to 1.6 million pesos in 2022 from your 432,000 total investment, more than tripling your money. Now I have a video talking all about this in detail, where I discuss the power of your 1,000 pesos, linked down below. Now the best part about stock dividend investing is that there are no dividend factors in play. As long as you buy before the ex-dividend date, which is announced by the company, you will get their full dividends. It's that simple. So for example, if you invested 1,000 pesos a month in that company, if all those fall before the ex-dividend date, you get the full dividends. This is even if you put it a day before, it doesn't matter. But the only downside is that you're taxed on your dividends, which is around 10%. So for example, the same 12,000 pesos in stocks, assuming you put all that before the ex-dividend date, you will get 720 pesos. But after the 10% taxes, that's only 648. Now let's say you luckily invest every time your 12,000 budget before the ex-dividend date and get the 6% dividends a year like the PAG-IBIG MP2. After 5 years, your money would have grown to 70,440 pesos. This is after taxes, so a little lower than the MP2 fund. But remember, this is only your total investment and dividends alone. If you're lucky enough that you invested in a great company that doubled its stock price, then your money would be larger in the end. It can even grow to as much as 100,000 or 200,000. It all depends on the company's stock price. So to have a clearer picture of what is the right vehicle for you, let's compare the pros and cons. For PAG-IBIG MP2, first of all, it's so simple. It's a no-brainer investment. You just have to transfer money every single month or once a year. It all depends on your budget. Second, there is no risk involved. Yes, it is risk-free and is also tax-free. For the cons, first is lack of control, since you have to stick with the maturity date and you need to have a valid reason to withdraw your money to get at least 50% of your dividend income. If not, then you get nothing. Another con, there is no price appreciation. The only growth you get is from dividends. Now moving to stock dividend investing. Pros of course, bigger growth potential, since you not only get money from dividends but also from price appreciation. Second, liquidity. There is no maturity date. You can sell your stock anytime. You can liquidate all your money in a single day without asking for permission. Third, complete control. You're the one in charge of where you will invest your money. If you want to invest in real estate companies, then you go buy real estate stocks. If you want to invest in power companies, the same. Unlike for PAG-IBIG MP2, it's all up to them where they will use that money. Now for me, this is what's exciting about stock investing, is that you get to support the companies you like. For example, if you want to support renewable energies, then you find a company that invests in those kinds of things. So for the cons, 1. It takes more time. Of course, you don't just copy someone else's investments. No, you have to do your research, you have to know what you're investing in, and of course, you have to know if you're paying the right price for that company. 2. There is a risk. Yes, as mentioned earlier, you can even lose a lot of money if the stock price plummets down. That's why you need to be careful in investing. 3. Fees and taxes. There are taxes when you get dividends, and there are taxes and fees, which is the brokerage fee when you buy and sell stocks. Unlike PAG-IBIG MP2, the only fee involved is the bank transfer to your account. So in conclusion, if you don't have time to research individual companies and are just looking for dividends alone, I suggest going with PAG-IBIG MP2. But if you want potentially bigger gains and can stay patient and calm even when there's a stock market crash or recession, and have time to do your research in evaluating individual stocks, then go with stock dividend investing. Or try a mixed portfolio, have a budget for a secured investment which is PAG-IBIG MP2, and have a budget to play around with stocks. It all depends on your risk tolerance. So please do not depend your decisions based on what your friends or some YouTuber are telling you. No, each individual has different priorities and capabilities. Do not push yourself to stocks if you don't know anything about the stock market. Knowing your weaknesses is a strength that can help you grow your money wisely. So before you choose, start first by knowing yourself and what are your goals. That way you can choose the proper vehicle for you. So with that said, if you have gone this far and still haven't clicked the like button, then I'd appreciate it if you do so before leaving. And if you want to know more about stock market investing, I show every month the progress of my portfolio, and I also have videos that can help you learn more about it. So do subscribe to my channel. So thank you and see you in the next video.